Good morning, everyone, and welcome back to the breakfast show with myself and our favorite co-host, Jose. How are you? Oh, good
I'm pretty
afternoon.
good. Good afternoon, good morning, good evening to everybody watching. Thank you for joining us. And doing pretty good. We have an interesting earnings later today in the semiconductor space. So a little bit excited about that. And I haven't really looked at my portfolio lately. So maybe that's I'm also in a good mood.
Better not. Better not. Will it be green today? Will it be red? Remains to be seen, ladies and gentlemen. But yesterday we've had Tesla, we had Lam Research report, this more, I think, Lending Club as well. So that gives a little bit information on SoFi for the next week. This morning we've had Mobileye. It's always the same. Mobileye in the morning, Intel in the afternoon. We've had Evolution AB. Not good. I'll tell you this already right now. Not good. Yesterday we did have, for those wondering why Oscar is down, we did have another player, Molina, I believe is the name, report, and the medical loss ratio there was not great, especially not because of the ACA marketplace. But I'll counter that argument with something that Oscar's management told us at the start of September. So if any of you have any questions on the companies that did report earning or are going to report earnings, let us know in the chat. Jose, I quickly saw the Tesla numbers, but were there anything specific that you were surprised by, or did you like, or did dislike by yesterday's Tesla earnings?
You- you- uh, I'm not a massive Tesla shareholder right now. So when I look at their earnings, I kind of try to more look at the overall ecosystem. But So I'll explain some of the things that really caught my attention. But in forms of numbers, revenue was up a nice amount on a year-over-year basis and sequential basis. It wasn't the best, it wasn't the peak, but I think it was like one of the top three, top four quarters in the automotive segment in the past 5 years. And that really caught my attention. And then I have a question, right? When I saw those numbers, is it here in the United States where people are just not pre-ordering, but kind of getting those orders ahead of the incentives that were going to end in September? Or is this kind of a new trend happening here? So it'll be interesting to see the upcoming quarter. The guidance that they gave, they mentioned is there's just so much stuff happening that they can't really give a really good picture. And I kind of understand that. So in forms of numbers, that was interesting. Their free cash flow was also a pretty insane number of 3.9 billion. Um, Now, what really got me excited was kind of them discussing their AI chips and stuff like that. So they have the inference chips that they use on their vehicles. The AI 4 is the current generation. They mentioned that the AI 5 is something that Elon has actually been working on with the team pretty hands-on, it seems. And what I found interesting, Neil, about this one, it's the A5 is going to be manufactured by both TSMC and Samsung. And one of the reasons is they want to have a nice amount of excessive chips. And it's like it's excessive, but they can use it in various places. They can use it for the inference of their vehicles. They can use it for the potential of the Optimus, which is still going to need some form of inference chip. And then it's also going to, they can also use it side by side on some of their data centers for some of their compute needs. So he did break it down a little bit more of like why they still need Nvidia and why this chip is also needed, the AI 5. So yeah, I'm going to drop it there just if maybe anybody had any thoughts or comments, or if Neil, if you yourself had any thoughts or comments.
No, I don't know. Is my mic volume now a bit better? Because I saw it was a bit lower than usual. So testing 1, 2, 3, mic should be at a normal level right now. But now, all in all, I mean, it's Q3 was definitely a good quarter revenue wise because yes, like you said, people were maybe rushing to buy before the tax incentives were removed. So of course that helps with that. But I do believe EPS was a miss by a couple of cents or something like that. They did say that they are on track here to starting in 2026 for the Cybercab, Semi, and Megapack 3. But again, starting in 2026, it's early 2026, mid 26. When exactly? Because I do think that they said that Tesla Semi volume production, if I remember correctly, should have started late this year. But maybe a ramp up volume production. I don't know, starting 2026. But okay, so be it. As for the rest, I mean, energy is the one where I'm like, okay, if anybody's looking for an energy play, why not just go with Tesla? Because their energy segment is great margin wise. What is it in the 30% or so? If we go and look at the here energy generation and storage, this is basically it per quarter. A wonderful thing, $3.4 billion, and probably continues to grow, right, with this whole data center build out. It's a no-brainer. Now, of course, yes, with Elon owning a couple of companies, yes, you might say that maybe like Tesla is selling to XAI to build out Colossus and all of that. Okay, so what? I mean, it makes sense, but the total addressable market is quite big. And then, yeah, when we have these discussions of, okay, if the big tech companies are going to expand in certain cities, electricity in those cities is going to be more expensive, then maybe, it is something I think they mentioned during the All In podcast, is, yeah, those big tech companies should maybe subsidize batteries for the residents in those cities to make sure that, yes, when energy is cheap, it goes to them, and you get the trade and you get the incentive. You basically have the goodwill of the citizens there, because if you come into a city, you want to build out your data center, but then the electricity for everybody else becomes more expensive, then you're just going to create, well, more hate towards big tech companies. And I mean, those big tech companies have the free cash flow to support these types of projects. Like, you come into these cities, you invest in the grid, you make sure that the citizens do not have to pay extra for the electricity, and then you can also build out your data center. I think, to me, that's a no-brainer.
Yeah, yeah. I mean, the energy part is definitely pretty strong for them, and even Elon highlighted how a growth potential is obviously the data center space. It's something he's talked about, I believe, in the past few quarters as well. And then I know you mentioned the earnings per share. They did talk about how both tariffs and kind of fiscal changes in the United States created about a $400 million hit in there we go. Yeah, in operating expenses, and it was pretty much broke even between the both energy and the automotive company. He says it's pretty even, about 200 million in each segment. But yeah, I mean, interesting way to see. It's obviously going to be even more interesting to see how the market shifts with no longer having those incentives, and what kind of tailwinds we will see from there. I didn't listen to the call completely because I had to leave midway, but
You
I
fell
read some
asleep.
of it.
You
I
fell
fell
asleep.
asleep. No, I had to take the little one has swimming, so we went to swimming classes. But one thing that I'm curious about, maybe I don't know if I've talked to you about it, but they always talked about having the more affordable option, right? The more
Hmm.
affordable vehicle. Then they released this standard platform. Which I mean, I think it sucks in forms of what you're losing to what you're paying. So you're losing that glass roof, you're losing a nice amount of things inside, some heating. I think for the back seats, you're losing a lot of things. Where I don't know if the $5,000 is worth it. In your mind, do you see this standard as just a way to maybe shut up investors that were an analyst that kept talking about a more affordable reason, even though they know, I mean, it's the same vehicle pretty much. So it's not like they created a new supply chain line or anything. It's a great way for them to say, look, we did it. We checked the mark. Now can you as an investor or shareholder or analyst stop talking about it? If it doesn't sell, it doesn't sell, but we did it at least.
I mean, yeah, to me, of course, I mean, it sucks because I expected it, first of all, to be a bit cheaper, right? Because the difference is really not that big. And maybe it is made on purpose. So you go and spend that extra 5,000 to get all of the extra things. Okay, fine. But again, the goal to me was to
Yeah.
create actually an affordable vehicle. Okay, maybe on a per month basis, it's true that it is cheaper as well. But I thought they could have maybe offered a sub 30 sub 30K car, because in Europe it's still very expensive. Like in Europe, Teslas are still very expensive. I saw a post, I think last week, that said that the average price of a vehicle now has reached $50,000 in the United States for the
That's
first time.
wild.
um, that is wild. That is wild. And again, I don't know why, if it's only $5,000 cheaper, couldn't you have made it a little bit cheaper than that, and then try to upsell FSD, if because you can make up, because FSD is what now, 8,000, 10,000 or something like that, or per month is 99 or whatever. You can make it up through that, but I guess they still believe that people will not want to buy cars because of autonomous vehicles. Um, but yeah, to me, it was a miss. It was a miss because I really thought they would have been releasing a real affordable model that would definitely compete on pricing with, for example, the Chinese models out there, because the Chinese are making vehicles for pennies. Okay, they get the resources and sourcing for for pennies as well, because again, we know they control quite a lot of the supply chain. But still, it wasn't that great. But well, hey, maybe for some people this is good enough. Maybe they just need four wheels and a steering wheel, and that's it.
Yeah, and I like that analogy where they just want something cheaper to really upsell. It's like you can buy a medium fries for $3.99, or you get the large one for $1 more.
Yeah, it's like
Kind
the
of sense,
Starbucks
right?
thing,
Yeah.
the psychology of the pricing there in the middle. Yeah, maybe I don't know. And then we'll see with the cybercap, right? Because there's still some people debating cybercap. Is it going to have pedals and steering wheel? Is it not going to have? To me, I mean, again, it's a whole debate of people that believe that you want to buy a car. I still believe that people would like to own a car, because I don't know. It's been like this for a long time. You would like to own the car because, if I don't know, in 10 minutes I would like to go out and I don't want to take a robo taxi, I just want to take my car somewhere, then I would like to own my car. Um, but yeah, I guess that's the whole discussion here. But I do feel like we are not that close to having everything autonomous. And I think the messaging has also changed a little bit, because it's been like 2 years where the messaging has been like, oh, FSD is here, full self-driving unsupervised is here. But now, like, the messaging has been uh, a bit calmer, I think, which is much better, because we know that Elon timeline doesn't make any sense.
I wonder if the timeline, the messaging has gotten better just because we are seeing kind of more improvements on FSD at such a rapid pace. I mean, uh, m- I just got the new 14 point, I forget what, 14 point something
Hmm.
on my Tesla Model Y. And one thing it did yesterday, my wife told me, is it actually pulled up to the driveway and parked this time. Normally, would just like try to find parking outside, but now you can set driveway parking, and I think that's crazy. That it literally from start to finish, she has about an hour and some change commute, and she pretty much could turn it on and just do nothing for that time frame. So it it's crazy. It's pretty cool. Now stock price though completely different. It's probably not my favorite Max 7 to be purchasing at the moment. So while I am excited about kind of the technology itself, it's not a stock I would be excited to be purchasing at these levels. Any thoughts from you there, Neil?
No, I agree. I agree. I mean, it's down 3.8%. It's going to be up 11.4% this year. It's up quite a lot, of course, since the lows in April. But yeah, it's $1.4 trillion in market cap, 50 cents of EPS. Okay, they took a little hit, so of course you can understand the argument of valuation just doesn't make sense. But with Tesla, it's been like this for years, right? Valuation never made sense because at one point it will make sense if XYZ happens. Wait, what happened here?
Sorry, I didn't have chat, so I just reset real quick.
Okay. Um, because yeah, if they do scale up robotaxis, again, I'm in the camp of yes, they're going to scale up robotaxis, but they're not going to be the only ones, as we are clearly seeing right now, right? With Waymo, with all of the partnerships that Uber has, there are lots of other players out there, Baidu, some other Chinese players, Pony AI. I think autonomous vehicles is going to be commoditized. It's going to be a commoditized service in the future. It's going to be a race to the bottom. The question is, when are you going to have like a large scale fleets worldwide? Remains to be seen. But with Tesla, you get that. You get the car business, you get the energy business, robotics with Optimus, of course. What I say, early 26, Optimus version 3, I think. We might get a little preview on that. Robotics, of course, a huge market potential for them. But that's the thing. With Tesla, as an investor, you have to understand that you're buying the company today, yes, but you're definitely buying, let's say, expensive call options on huge potential business expansions in the future. It's not something I'm saying today. It's something that we as Tesla shareholders have understood for quite a while, for sure. I don't own any car right now. I love cars, but yeah, if I would buy a car, it's probably going to be a Tesla. Because I like it. I like the tech. I like the way it drives. Um, FSD, I've tried it now a couple of times. Also, it's very nice. I didn't try the latest versions, but if you don't try and experience it, then you have no idea what's going on. And I think you, as a owner, can tell us for sure, like that it is getting better and better.
Yeah, I mean, again, now we're talking about the technology. Definitely not. I don't want to seem like I'm uber bullish on the stock. Like I mentioned, it's my favorite, my least favorite Mag 7. I believe it has opportunities right now. Definitely. In terms of the vehicle, I enjoy it. It was one of it's the only car, Neil, that I've bought that I haven't had like even a tad amount of buyer's remorse. Every other vehicle is like, this car is fun as heck, but it's like, did I really need it? Did I really need it? And this is one of those big major purchases that, um, like I'm not. It's like I'm happy I did it, and for my next vehicle, it's like I'm not going to get another Tesla anytime soon. I would wait for the AI 5, which is so crazy. It's like buying a PC now. It's like no point in buying anything now until you get the upgraded chip. But I enjoy the product a lot. Every time I put FSD, I get surprised of how well it is. Um, and that's coming to, like I said, I really do enjoy cars. There's a lot of cars. Well, it used to be a nice amount of cars in my catalog. Now I'm only down to 2, but it's like I range from um, I don't want to say, but just yeah, I enjoy it. It's a really fun car.
Yeah. Of course, petrol heads and everyone is going to say, yeah, but it's electric, it's not making noise, and this and that doesn't feel like a real car. Trust me, as someone who has driven quite a nice cars, I didn't own it, I just had to drive some because I know people that had. It's true. It's not like driving a Ferrari, it's not like driving a Lamborghini, or even some people here in the chat say a BMW M4. Yeah, it's true. It's not the same sentiment, but still, for the majority of people, you just need a car to go to work, to go with the family somewhere, to bring your kids to school. And a Tesla does it. It does what it has to do. In the US, you also have FSD. Now, you might be a skeptic or not, but I highly suggest you go try it out, because it is quite something. It is quite something. And again, we're only talking here now about the product. Both of us own Tesla shares, but it's not like we're jumping right now to go buy it, because yes, indeed, it is probably my least favorite Max 7 at current valuation. Quite far actually from the Googles and the Amazons, for example. But I am still astonished at the amount of free cash flow for the quarter and the fact that they have $41 billion in cash, um, despite building out gigafactories, data centers, and all of that. It's quite impressive, the capital efficiency of the business. But yeah, if you look at margin, uh, earnings profile, it is definitely a joke from a valuation perspective. That's uh, that's for sure. That's for sure.
Yeah, so um, another, I don't know if anything else. I don't have anything else here on Tesla, Neo. Um, we could talk about Oscar. I'm sorry. I'm just sorry. And but also this quantum pump happening is maybe something we want. I saw some questions coming in. If you want to talk about that, I haven't seen. I think there were even news that it might not be true. But
Yeah,
they're still pumping, right?
yes. So we'll touch on that real quick. Oscar, unfortunately, Oscar yesterday was down 6.4%. Pre-market, it's down another 6.5% right now. It didn't report earnings, but another company called, this one right here, Molina Healthcare, it did report its earnings. It's down 19% pre-market. And so they reported the following thing. Basically, what they said here is that they are seeing some weakness. For example, here, consolidated medical care ratio, 92.6%, up from 89.2%, indicating higher medical costs relative to premium revenue. Marketplace MCR here also reflecting significantly higher utilization relative to risk adjustment revenue. Now, if you remember, or maybe if you don't, but Oscar had an analyst conference at the start of September, and I'll show you exactly what they said. I actually made a post on it just before it went live, but here it basically is. This was at the start of September, so yes, there was still a month of the quarter left, but until that point, they said the following thing. Medical loss ratio is anticipated to increase in the third and fourth quarter, with second half seasonality expected to align more closely with 2023 than with 2024. Revenue guidance was raised. Utilization normalization. So utilization trends have continued to moderate into Q3, now almost back to what it was expected for the risk in the book. So that was fine. I mean, fine, better than feared. Again, same here with market morbidity. Also, better than feared. The impact of members losing subsidies due to dual enrollment and failure to file and reconcile has been modest and immaterial. As for the enhanced subsidies, again, 2026 pricing assumes the expiration of enhanced subsidies. So we've talked about that before. If it is extended, it's going to be pure upside for the company. As for guidance here, they reiterated 2025 outlook. Again, start of September, 30 days or less than 30 days before the quarter ended. For the back half of 2025, MLR is expected to increase in Q3 and Q4 with seasonality more akin to 2023. So they have been telling us that things looked better than feared. They expect to return to profitability in 2026 and achieve meaningful margin expansion supported by its 2026 pricing strategy and ongoing cost management efforts. To me, this shows that just because another company, in this case, Molina Healthcare, in this industry, is seeing some pressure, does not automatically mean that a company like Oscar is is going to be hurt as bad as well. I think that Oscar is probably best in class when it comes to that side of the market, the AC marketplace. Maybe the last 27 days of the quarter were extremely bad, and that completely changes things. But if that were the case, I think we would have had preliminary figures already, like I think last quarter. That didn't happen this time. And so overreaction, I think maybe not an overreaction just yet, just uncertainty by the market. Because yes, if they said so, then maybe Oscar could be experiencing the same thing. But if Oscar will report the opposite and will say that, look, yeah, we are actually expecting these things to normalize. It's a seasonality thing, but it's better than feared. Then I do expect the stock to recover quite comfortably. We've seen that before with other companies as well. Prime example, of course, is the Snapchat earnings for the last 3 years when they reported before Meta, before Google. Snapchat reports, it crashes Meta and Google, then Google and Meta report, and suddenly these companies are doing extremely well. And so, yeah, I think Oscar is just a much better company. I think it's well managed, and that's basically the reasoning behind the small dip right now. Or maybe it's purely because Jose is here. That can also be
And
an
that's it.
explanation.
That's why I stopped streaming, because a lot of your Oscar people just kept sending me death threat. Just kidding. They did not stop streaming, or else stop getting on Neil's.
We are going to pull your health insurance.
um, um, yeah, I mean, we can see the stock is still doing pretty nice. I mean, last time I remember I saw this stock at like $15 when it was really tanking just a few months ago. So even here at the 19%, that's still some great returns for shareholders.
No, it's
So
it's a
stop being mean to me.
extremely yeah, it's a extremely volatile stock. I mean, this thing goes up
Yeah.
8%, then goes down 8%, goes up 6%, goes down 6%. If you trade this one, you're probably making a ton of money, especially over the last couple of months. I mean, look at it. Go up, we go down, we go up, we go down, we go back up. It's quite insane. Of course, there are some artificial uncertainties because again, the guidance does not include ACA subsidies. So I don't know why the market is still trying to gamble on the fact of this might hurt the company. No, right now it's like zero anticipation of ACA subsidies being involved in the guidance. If it does get extended, then it's pure upside. And until also the 2027 guidance changes, I don't think it's time to. It's a reason to worry. That's for sure.
And Neil, David brought up an interesting thought, right? He mentions really surprised that AI health stocks never really took off. I feel like the only one that really has taken off has been that Tempest AI. I think it's Tempest, right? Tempest AI.
Yes.
Um, but maybe that might be for other reasons. Uh,
Yeah.
for other reasons. But someone else also mentioned. I think here the AI will definitely the AI. I feel like an old man. AI will play a critical role in the healthcare industry. And once we start to really see that impact the consumer way, or start to really get some, I don't know if ads, just more eyes on it, I think that will create kind of a sentiment shift into um some of these AI health stocks. As I think right now, nobody really believes that AI is going to solve some form of healthcare issue. But I think the moment we hear of, oh, look, this drug that is now fixing this type of sickness or disease was all made thanks to AI. Once we get a press release, I think you kind of start to see a shift in trend. Now, a shift in trend, does that evaluate a stock price growth? No, but it does create a trend where stock prices tend to move in one direction.
I agree. I mean, I think I wouldn't be surprised if Google finds more cures than any pharmaceutical company. I wouldn't be surprised. But yeah, Tempest
And then they have that
is
Fold, right? I think Fold AI, Fold is their AI
AlphaFold.
model, Alpha Fold,
Yeah,
right? Yeah. So, I mean, if they should stop with the quantum stock, quantum pumping, and they should go with the AI healthcare pumping instead.
exactly, exactly. Yeah. So the let's put this one for example, Rigetti. Although it did crash over the last couple of days, so that's a good thing, a nice, good pullback. Although I do still think it can crash another 50% and still be expensive, but okay, let's not be greedy here. But yeah, it is up a little bit pre-market on that rumor. Um, Actually, a bit less now only 9.3% pre-market. A lot of these quantum names. on that rumor that maybe the U.S. secretary has been talking to some of these quantum computing companies, but it seems that that's not true at the moment. Although we do have a Trump announcement at 3 p.m. today. So people, of course, starts to speculate, oh, is it another investment in certain sectors, yes or no? If it is, it's probably first going to be the defense industry, in my opinion, and not and not this quantum thing. At least that's what I think. I don't know. Might be wrong, but yeah.
So we could have a nice pump until 3 o'clock, and if it's not it, we'll have a nice dump afterwards. Or if or something gets leaked, then we just have to check those betting. Um, we have to check those betting platforms to see what's the real answer.
Probably, although the betting platform yesterday were completely wrong on the Tesla earnings because it said like 85% or so that they beat earnings, and it was a miss. It was a miss. We did have, where is it? We did have a Mobileye report. Let's see what the stock is doing right now. So Mobileye reports every time the same day as Intel. Just the stock is basically flat right now. And Intel reports later today. I wonder, do you think they will make an announcement? Or is it just going to be like a boring quarter and then just talk about whatever was announced over the last 2 months or so?
Mobileye or Intel?
Intel.
If they make any announcements, huh? I saw earlier today that there were some news about one of their CPUs that's going to be for their 18A
Mm-hmm.
platform doing really good. I would love to hear some updates on there about that. In the manufacturing side, I don't know. I think the advanced packaging has a potential of seeing some announcements. Usually there, though, they don't say any big names. They just say, look, we got more customers here or more growth potential in the advanced packaging side. If there's any major announcements, it'd probably be the selling off some. I think Lee Bhutan is still wants to find more money. So I think it's more either selling equity. Maybe I think they still own a good amount of Mobileye. Maybe sell some equity here. But yeah, outside of that, I can't think of anything, Neil. How about you?
Yeah, I wonder. This was the Intel Panther Lake processor show 25% graphics boost in early tests. So I guess that's a good thing. If they do announce something, it's probably going to be a Foundry investment announcement, because selling a stake in Mobileye, you would assume that it would have been announced when Mobileye also reports, which just happened, but they didn't announce anything. But yeah, I guess comments on 18A progress on that, maybe some 14A early signs, but I highly doubt it. There will still be questions on that Nvidia announcement for sure, because as we know that it does not involve Intel Foundry as of now. It involves TSMC, which to be honest is really not that bad because that would make Intel products actually a super competitive as well. But yeah, I expect the quarter to be a beat because it's quite easy to beat. And we've had comments and signs that things are looking better than feared again. But yeah, guidance for Q4. Q4 is a holiday season, so we'll see how strong that can be. But any announcements to me is probably going to be something for Intel Foundry for sure. Maybe a Microsoft one. I don't know.
No, in the past month, Neil, I've seen two interesting announcements or reports or rumors about Intel. I wonder if we get any clarity on them. On OCP, this is not a rumor; it's an announcement. They mentioned that they're working on a new type of CPU. I forget what it was called, but they're going back to the AI accelerator market. It's not expected to sample customers till 2026. I forget the damn name of it. But the second thing that I've heard is Semi-Analysis posted a few weeks ago that Intel's going to find a way to use their Gaudi 3 as a form of ASIC that you can kind of plug into a lot of servers.
Mm-hmm.
So they have massive inventory in that. And I don't think they're making more of them. It might just be trying to find ways to sell that excessive inventory. But any update on that would be would definitely be pretty interesting to hear. And finally, obviously, we got the big Nvidia and Intel news. Do we have any updates on that? On when might we start to see potentially the chips that are going to come out from that?
Yeah, because they did say that they've been working together on this for a while. So because that was our question as well before the conference, on that same day. So it's not like something that came out of nowhere. So they both of these teams have been working on it for a while, I think since the start of the year or something. So is it something for early 2026, mid 2026, late 2026? Would be great to actually know more about that. And then we'll see. Yeah, Libutan is probably still going to look for some more money to make sure that the balance sheet is way more stable. I mean, the balance sheet is going to look way better this quarter than it was last quarter. That's for sure. I mean, next quarter as well. Um, so yeah. Do I have a question from Rob? Do you buy back in Intel if the fundamentals are improving? I think so, yeah. Because right now, someone did comment. So I have nothing from Intel today because I had my options. I didn't have. If I only had shares, I would of course still keep the shares, but with the options, I took it all off the table, and now I'm waiting. I'm waiting. I could buy today and play the earnings game, but I'm in no rush with this one because of the performance of what has happened
And
over the past 2 months.
I also wonder, because I know with the Intel and Nvidia news of them investing, it did show that they had to go through some regulatory process before it finalized, um, or got approved. I wonder if we'll get. I don't know if it's finally been approved, or so. I would love to get some update. But I do, if I recall correctly, during the press releases, the investment is all dependent on the approvals getting of the regulatory stuff getting approved.
Hmm. Yeah, but then again, I guess it's less of an issue because I mean, SoftBank invested 2 billion, Nvidia investing 5 billion.
It's still less than 10% of the company.
Yeah,
Nothing major. No, no real. I think no. It's more of a passive investor at that as well. Nothing crazy.
yeah. Plus, with partnerships, I don't think the scrutiny is so big. Like every time a company partners with another one, I don't think there's so much regulatory pressure on these types of things.
One thing before we move to something, Intel last quarter, one of the biggest things that made a splash on the company was that it was the first time we've heard that if 14A doesn't get
Mhm.
customers, it could be stopped. So I wonder if that's analysts are going to be, oh, so what's the current, um, what are you guys projecting here for 14A? Is there any visibility on potential customers coming in, or what? So I think that's also going to be a topic, as last time we did see that in their 10Q report.
Yeah, yeah, no, for sure. Especially after all of these announcements, would be something good to hear. So, this is the current situation with the quantum stuff. We've also, yeah, yesterday we've had Google talk a little bit about quantum. We've had IBM talk about it a little bit right now. And this was just released a couple of hours ago. A US commerce official told Reuters in an email statement that the department is not currently negotiating with any of the companies. So the quantum names out there. Where there's smoke, there's fire. I don't know, but
Yeah, plot twist. It's they're not negotiating because the deal has already been negotiated. So it's like they didn't lie to you. That's the quantum balls right now. It's like
uh,
it's all between the lines.
yeah, but I mean, but I don't even see the why would they like what's the reason the U.S. government would want to invest in these small companies for quantum? To me, it makes zero sense. Like invest in IBM and Google, that would make more sense to me.
Yeah, I mean, right now it definitely seems like they have other things on their minds. Like, to me, let me just say, a lot of what the current administration does is where a lot of the big money is flowing, right? A lot of the big money is flowing in AI chips and stuff like that. So that's certain parts. The semiconductor industry coming into the United States is another nice amount of big flow of money. Um, I don't know. I doubt there's a huge amount of flow of money here where You're seeing kind of like the rare earth also being a nice flow of money right now.
Hmm.
So and also for national security purposes as well. So I don't know how this falls within those ecosystems. Again, I'm not an expert in quantum, but if anybody has any thoughts on how it falls either on the national security side or a big flow of money, we'd love to hear it. Then if someone says it's just gonna overtake AI, I don't think I'm gonna listen to you.
No, and I mean, also every time we hear like new things from quantum computing, it's usually from the big boys. It's rarely from the smaller ones. And every time, for example, the Google announcement yesterday, or the Google little quote yesterday, or IBM's comments on it, it makes you think, why would you need these smaller billion-dollar companies that make $0? Why would you need exposure through them? If you really want exposure for quantum, just buy the big boys, because the big boys will probably actually reach something useful before all the rest.
Neil, question for you. Yesterday was a pretty bloody day. Did you do
Indeed.
anything on your portfolio?
I bought a bit more of Nebius under 100.
Mm,
Um,
nice.
keep accumulating a little bit. Can it go lower? It can go lower. Um, but yeah, to me, it's if it goes even lower, we were back at prices after the Microsoft deal. Like after the Microsoft deal, we closed out at 90, 98, $99 or so. Um, and so yeah, that was the only thing yesterday. And then since we are in the earnings season, I'm trying to keep a bit more cash to see what's going to happen over the next couple of weeks. Um, but yeah, that's the only thing I did yesterday for now.
Uh, Same here. I didn't buy. I sold some puts on Nebius yesterday. So with the same mentality, that's the only one that really caught my attention, and the one that I feel like I'm a little bit lacking in forms of position, and don't mind getting more into. If it does, if the puts get exercised, I'm happy with it. If not, premium was really great
Hmm.
yesterday.
Fair enough. Fair enough. Um, there was a fintech company. Actually, let's first. I want to quickly touch on Evolution AB because I know some
And
people
Uh, and
own
also,
it.
we're seeing a lot of comments on your side coming in about Super Micro. Seems like it's pre-market down after some um, pre-earnings release, which they typically always do, and it's always a lot lower than what the market expects. I feel like for the past few quarters, that has been um, a cycle of Super Micro.
Okay, let's. I'll try and pull it up real quick. So okay, we have just this thing right here. So Supermicro stock is moving lower in pre-market, providing some preliminary results. Again, the usual thing. Design win upgrades pushed some expected Q1 2026 revenue to Q2, resulting in estimated revenue of $5 billion versus 6.6 to 7 billion. It's the usual stuff with them, literally. It's every time the same thing. And this has been the issue. This is something that we've said time and time again. Yes, it might look cheap, right? Because price to sales is under one or whatever. But the fact is that you cannot trust them. The fact is that every time they give you guidance, it comes in lower. And there's always an excuse. Oh, it's because of Nvidia. Remember that thing last year? It's because of Nvidia's delays. Or we don't know what to do. It's because of Nvidia. But then at the same time, you have Dell that doesn't seem to have the same issues as SMCI. Here again, Q1 was supposed to be $6 to $7 billion. Now it's $5 billion. And it's been like this for the last God knows how many quarters that it comes in lower. Fiscal year 2026 revenue guidance was supposed to be what, $40 billion. That's also expected to be much lower. That's the problem when you don't trust management, then doesn't matter if you think it's cheap or not. It's just not worth it, in my opinion, at least.
Yeah, I was just oh, there we go. I was looking at their press release. It's interesting, right? Because the original 2 quarters or 3 quarters ago, when they really moved it off, it made sense to me because of that Blackwell delay and the Blackwell issue that was happening. This one doesn't make sense to me. It really doesn't. Is it that the people are just, we don't want the GB200 no more? We're seeing that we want the GB300 and the B300 platform. to me, then it means that they're getting inventory too late, that by the time they get their share of the chips, the market already wants the other one. And that doesn't seem like, I don't know if they've done something to get Nvidia mad, where they're no longer the preference of getting those chips ahead of time. Because if they got the GB200s and the B200s when they came out, they would have been able to meet this. Now it seems like, look, it seems like maybe we got it a little bit too late. We're actually seeing more demand for the GB300 and the B300 instead. The only maybe saving grace is, after this generation, the B300, Nvidia will go back to that about 12-month time frame of releasing the next chip. With the B200 and the B300, it happened so fast because of that delay. They didn't stop GB300. So let's say the GB200 was 3-month delay, or whatever it was. Now it was only about a 9-month difference between the GB200 and the GB300. So, but still, I'm not liking this one. That it's been, the design wins have pushed off to the next upgrade cycle.
And look at the last sentence here. We see customer demand accelerating and we are gaining AI share, reiterating revenue of at least $33 billion. Remember last year, that was supposed to be $40 billion. It's a $7 billion difference, but they had to add with the expectation of delivering more. With the expectation of delivering more. I mean, just don't add that, because you've been under delivering for quarters now. It's just better to not say anything and just over deliver. That's it. But hey,
And the stock
margin-wise,
is recovering, right? And that's completely different. My thoughts, and I'm pretty sure your thoughts, Neil, have nothing related to the stock price itself. I'm guessing they probably also gave some strong numbers for 2026 later on in this thing. Some crazy number. I think GB300 is going to do great. And best of luck here. But the server business is definitely not the business I want to get into.
yeah, it's a very low margin business. Very low margin business. And again, if you want exposure to it, I think Dell is just a better choice. Because you also get the other, of course, Dell business. The other company that reported is Evolution AB. That stock is down 8.5%, was down a little bit more. I used to follow this a bit closer because, yes, it was cheap. Management did explain well what's going on with the company, in the industry, etc., etc. But this quarter was not great. This quarter was not great. And actually, I did miss here QNC. Thanks for the super chat. Are you planning any fan meetups in the future? I mean, who knows? Who knows? Maybe in the future. Maybe if I do come to the US for a World Cup, World Cup games, maybe that could be a good time. But I'll have to first find tickets for that. But Evolution AB. If we go and look at the report real quick, I'm not going to spend that much time on it. If we go and look at the report for the quarter, let me actually find. It's not great. Okay, it's not great margin wise, revenue wise. It's not great. I understood the issues before, but right now it's a bit of a no man's land at the moment. Yes, there are again some issues regulatory wise, some specific markets. Maybe they overdid it in the Asian markets, etc., etc. But it might look cheap. But here again, I will have to say that it's every single quarter. It's another explanation. It's another excuse. So with this one, I just put in the penalty box and just wait and see until it's clearer and easier to understand what exactly is going on there. But yeah, overall, it wasn't a good quarter for Evolution. Not a good quarter from a revenue perspective. Not a good.
What do
quarter
they do, Neil?
Well, this gaming,
iGaming,
okay. Online gaming, casino games, and all of that. So it's
I
like it's
remember this was very popular in 2021, or I think.
but it's one
No,
of the
maybe not.
better it's one of the better
Yeah.
companies in the iGaming. Like it's profitable, it's growing. Um, but yeah, here again, negative and volatile developments in Asia, growth in Europe. That's fine, because they want to have regulated markets, because that means that the barrier of entries goes up, and it's good for them because they are regulated. Although they had to close or delay some things in certain markets, but yeah, I don't own it. It's one that we used to follow because it looked very cheap, and then things were, I mean, based on management commentary, things should have improved, but it doesn't seem like it's improving anytime soon. So penalty box for this one. Then there was another one, and I think you can talk about that a little bit more, and that's Lam Research. Um,
And before we go to Lam Research, I promised someone I was going to take a super micro question here. So let me just find it really quick. Eddie was wondering the following. Um, does Nvidia and AMD kind of building their own racks eat super micro lunch, or I not understand the business correctly? So Eddie, right? It's easy to get a little bit mixed up here, because one thing that both AMD and Nvidia have mentioned is they're building these server rack systems, right? When they mention that, I would expect most investors think that they're manufacturing their own racks, but that's not necessarily the case. What's happening is they pretty much create a blueprint to help showcase, hey, look, this is how, if you manufacture with our chips, this is how you build these systems. So when you, as Supermicro, as Dell, as Foxconn, or whoever starts to build them, you're able to build them super fast. The other great thing is this is more of like a template. So each company does their own unique way. Supermicro might have a unique way of cooling things, but at least they have a template and it speeds it up. So it doesn't, AMD and Nvidia aren't necessarily stepping on the toes of Supermicro, but they are giving this template to all the players, so everybody at least starts in some form of starting line. Then that's where now you have to differentiate yourself as a business and say, why would I want to go with the Supermicro rack opposed to a Dell rack or a Foxconn rack or whoever rack? Um, and yeah, so that's where they fight off, and that's why you kind of have like a very price war within this market, because the difference is all on what the company itself is doing.
with that, let's have a quick look at Lam Research. I see it's down a little bit. It's down a little bit. It has been performing very well, actually. I actually like the majority of the equipment makers out there. So it's down a tiny bit right now. Um, did you have a chance to look at the report?
Yeah, definitely, Neil. And I don't know if you want to go into this. Let's look at some numbers. Revenue. I think if we can go to financials real quick, um, just actually look at the charts. Um,
Charts or slides? Which one do you want to?
let's start with charts and then we'll jump into slides. I just want to showcase. Um, I just total revenue itself was pretty strong for this company. I think it was a record revenue for them, which is pretty crazy. Yeah, it is a record revenue for them. We're seeing this cycle shift, and this is a indication of how the semiconductor equipment space is extremely, extremely cyclical. Um, Now, the thing is, it doesn't seem like we're at the top just yet. And even though we're kind of hitting the numbers we hit in December 22, and that's when everybody was trying to buy as many equipment as possible, because you saw um, this huge demand for everything since we were working from home and all that. So that's why the massive supply chain line. Then eventually the world said, you know what, maybe we don't need as many laptops and tablets and phones as we thought we did. We don't need to buy more supply chain lines. But this is pretty good. Now, if we want to go, Neil, to the slides, I don't think there's anything else I want to mention here. If we want to look at the slides themselves, and let's full screen that, baby. Go down a little bit. Keep going, keep going, keep going. Some interesting things that came out from here is this. So this slide. So first for calendar year of 2025, they see WFE, which is wafer fabrication equipment spending, being higher than 105 billion, which was already higher. They increased their forecast a little bit compared to the prior forecast, which was already an increasement from a prior forecast. And the main reason is companies right now are investing a lot in HBM manufacturing, high bandwidth memory, which is a special type of memory that is used for AI chips. That continues to be a massive opportunity, increasing capex. Um, they expect 2026 to even continue with that, driven by AI related demand. And within there, unfortunately for this company, Neil, about 40% of total revenue is coming from China. We've seen this with ASML, right? A good portion of revenue comes from China. Um, and Jensen does like just uh, um, I wonder what his wife said that day. Besides the point, calendar year of 2026, they expect China to go down, but the rest of the market to really pick up any of the offset. So that's there. And then there was another slide. If you go down one more, um, they mentioned this that sorry, the one above that one. For every $100 billion incremental in AI data center investment, it's about an $8 billion incremental in wafer fabrication equipment due to all the types of chips and things needed. Um, so if Sam Altman gets his way of building data centers with all these partners, the wafer fabrication equipment spending can see a nice growth within the next 2 to 3 years. Um, and then the third thing was the one below this is the NAND market, which has been slow right now, is actually seeing a nice pickup. They expect about $40 billion conversion spending over the next several years. Things like SSDs, which are a lot of companies have seen nice memory players in the NAND
Mm-hmm.
space recently going up, and they expect that to continue. So that's still a growth opportunity. On the short term, though, Neil, they are experiencing some margin pressure due to tariffs and recent policies and export restrictions. I think they reduced their margins for next quarter by about 200 basis points or so. Um, Overall, the company is really good. The only issue I have with it, if one was to look at next 12 months PE ratio, it is trading extremely, extremely high. I think it's trading around like 32, where historically it trades around 22. So it's a huge growth. And I do know we're about to have the market open in a few seconds here. So let me stop with that before.
Um, yeah, it's. I mean, it's crazy how fast the sentiment change. How fast this is like the pure cyclical businesses, right?
Mhm.
Because like six months ago, this thing was like pushed to the ground every single time. Not only them, like all the others as well. Now 2 quarters later, we're like all-time highs revenue quarter.
Ding, ding, ding. Did it open? I don't see anything moving. Is
No,
the
no,
market
no.
closed? Did it say screw you guys? There
Now
you
it
go.
is.
Ding, 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 ding. Welcome to the market open.
Bing, bing, bong, bing, bong. We are open, ladies and gentlemen, as always. Don't pay attention to the heat map. Pay attention to what's happening here on the right. Right now, we have here 50-50, I would say. 50% green, 50% red. We have some of the AI names trying to recover a little bit from yesterday. Not by much, I'll tell you that. Not by much. We have Oscar still down 6.4%. I don't know what it. I mean, the fluctuations are quite crazy. So we'll give it a couple of seconds. We'll give it a couple of seconds. Um, what did I want to say? High expectations before we continue with that. High expectations for this earnings season for the big companies. Let's say.
I think for the big companies, yeah. I'm getting excited about Amazon lately. So I'm big excitement on the clouding business for them. The rest of the business, Neil, I don't know much about them, so I could care less at the moment. But on the clouding aspect, I still believe a nice amount of growth. I still believe that they're going to say the same thing. Hey, we thought we were going to be supply good this quarter or this year. That's not happening. Um, so clouding business, I think it's going to do extremely, extremely well.
My question to you is because the AWS last time they told us it's at a run rate of $123 billion, backlog $195 billion, grew 23% or so year over year. How much would you be willing to pay for just AWS, knowing that Amazon is worth 2.4, I think $2.4 trillion or so? How
What was
much
the
would you be
annual run
paying?
rate?
123 billion as of last quarter, so maybe it changed
Easily
right now.
20x that.
So the
So
whole
whatever,
Amazon business.
pretty much, yeah.
Interesting. So the whole Amazon business right now is worth one AWS, and you get advertising for free, subscriptions for free, third-party seller services for free, and the online stores for free.
Mhm.
Not bad, huh?
That's yeah, yeah. I like it right now, and I know right now people are scared because it's kind of that sentiment of it's losing market share in the cloud business. I don't know if we talked about it, but I know in videos many quarters ago, that was one of my fears. You're seeing the reaction of some of the investments that they lacked a year ago happen now. They're changing that. So the stock is right now reacting to what happened on their investment side a year ago. But now that they're changing the investment cycles, I think 6 months from now, a year from now, we're going to see that positive reaction on their clouding business, thanks to the investments that they're making this quarter, last quarter, and stuff like that. So I like that the market is kind of a little bit hating on AWS at the moment. Um, and look at that. Look at that magic that you do, Neil.
Yeah, I mean,
With
look at this perfect rebound yesterday. It's quite, sometimes it is quite crazy. It's as if everybody watches the same chart of like, now we buy, like it does not go lower.
Everybody has that same buy order at that right moment.
Yeah. No, but the AWS, we should be seeing it accelerate from here because of the Anthropic deals. It should start to be recognized, and I think the sentiment around it will definitely change
Yeah.
in this
So
quarter.
I agree. I think the Entropic deal is definitely going to help them out, but it does seem from the partnerships that they've announced with Nvidia recently that they're going to restart that aggressiveness with Nvidia investments again, which in theory in the next 6 months, so you have just the tailwind of Anthropic, which is growing at crazy levels. The demand for Anthropic is insane right now. It has definitely become my number 2 model. Um, Sometimes even my number 1. I
Clouds?
was like, yeah, I like it a lot. Um, I decided now I have 3 subscriptions that I'm paying over $200 a month for. I can't cancel any of them. I have
This guy is paying
OpenAI.
rent to AI models.
um, but yeah, OpenAI, Claude, and Google Gemini. Those 3 are killing it. But I think Claude, with these recent upgrades, really, really surprised me.
Won't last long because I'm pretty sure Gemini 3 is coming out later this year, and I think it's going to crush everything. Because Gemini is the only one that still hasn't really upgraded for a while, I think. Um, but yeah, we'll see. With Amazon, I mean, yesterday or 2 days ago, we had that report that said that Anthropic is going to use Google Cloud for tens of billions of dollars worth of a deal. Amazon was down like 1 or 2% because of it, but then again, Google and Amazon are big investors in Anthropic, so if Anthropic wins, I guess they win as well. But I think Google is going to be, I mean, crushing it. I think Google Cloud is crushing it for sure. Let's add Jose to the circle.
Nvidia stock price goes up. I use that money to go back into AI. They buy more chips.
If someone's asking how is OpenAI going to pay for all the data centers, well, now we know. Well, we know. Um, PayPal is surprisingly up a little bit today, but we're still under that 50-day moving average. Do want to see it above it before it reports, but that's next week. I'm still expecting an easy double beat from the company. I just want to have a more aggressive earnings call from management. But that's next week. Same with SoFi. Now, talking about SoFi, there is another company called Lending Club that reported yesterday, I believe, and that stock is up. Well, as you can see right here, it was up quite a lot more. It was down a bit, but that now is up 13.7%. Up 13.7%. It's a good indication of what we could be expecting from SoFi next week. The comments that I've seen from the company are pretty good, especially after the last couple of weeks of some uncertainty and all of that. So to me, it's like if Lending Club can put up these nice numbers, I think SoFi would have an easy earnings beat tomorrow next week. So Lending Club, we actually already have an analyst comment on Lending Club, raised the price target to $18. Key takeaways: structured certificates boost marketplace volume and interest income. 80% of originations from credit card debt consolidation. Credit tightening among peer open share gain opportunity. Again, to me, if a Lending Club is doing well, a SoFi should be doing well as well. Could also be a good thing for Upstart. I know, again, with Upstart, we've had that specific analyst talk about that, but then he did correct himself like 2 days later when all of these companies did lose billions of dollars in market cap. I was like, actually, a small mistake in our note. Small mistake worth 5% or so. But Lending Club, good report. Stock is up 14% right now. In my opinion, good sign for SoFi. SoFi is not really moving much right now, although here as well, some magic still stays on that above that 50-day moving average. Oscar is getting hit, but here as well, we are now here at that 50-day moving average. So we'll see if that one holds. As for the rest, seems like we have a good day. Let's actually look at some other names. So Salesforce, basically flat again. We have Adobe, probably still the same, 350, still the same. What else? We have some other fintech names. Sezzle is up a tiny bit today. Dave is probably following the same trend, up 2%. Figma. I don't know if you've been following Figma a little bit lately, but Figma has seen a nice rise after the Google announcement. There was a partnership, then complete
Oh, was there? I
retracement.
did not know that.
That there was like Figma announcement with Google. I think Affirm. I think Klarna also. I'm telling you, Google is killing it. Klarna is here again, still 36.4 bucks. Chime is probably still 18, 18, 17. This one is very interesting, very, very interesting at these prices. Mercado Libre up a little bit today, back to 2,100 bucks right now. Why is everything down? Everything's up. Why is everything down? I'm looking at the watch list, but everything is
green.
It is green, other than the couple of names that are barely down a little bit. So I don't know what you're looking at, but I'm looking at greens here. United Health is still around the same prices. So it seems like the market is willing to keep it at 360 until the earnings report, which is happening also next week. It's also happening next week. So we'll see. We'll see what happens with that. Any other specific names? Maybe Cypher. Same pattern there. Some quantum computing names. Rigetti is up 8.6%. IonQ is up 7.4%. No Adobe on the watch list. No, I can only have 30 names on the watch list, but Adobe is always one of those names where I look at it after we've done with the watch list. You can add more names, but you'll have to pay for it. What's the point? I don't need to pay for it. So,
oh my goodness, Neil.
I mean,
this guy.
Why do I need to pay for something that I can do in like half a second? Efficiency, Jose. Efficiency.
Oh my goodness, Neil.
Alibaba is still around 170 bucks. So that's up 2.8%. Who
What is
asked
Navitas
Chinese?
doing? Navitas or Navitos?
Navitos, 1.1, 1%. 1%. What was the other name that you talked about? The energy
Wi-Fi.
Solaris?
Oh, Solaris Energy. SEI.
This
40
one,
something. 46.
yeah, I mean, all of these names have had this exact same
Same
pullback.
yeah.
Exact same pullback. White.
There's like that's why the
White.
funny thing is like it's diversifying with a lot of these stocks. You're still pretty much within the same returns.
Yeah, I mean that's why we wanted to trim and focus on the specific
Sounds
names,
yeah
because they eventually they all follow the same thing. So
yeah.
what's the point? What's the point? Of course, you maybe want to play the fact that one might get a deal before the other, and okay, fine,
Yeah.
fine with that. JD.com. Still, I like Alibaba way more. I like Alibaba way more than JD. Thoughts on Lending Club? Rewind 5 minutes. I touched
Yeah.
on Lending Club. But yeah, all in all, some of the year, Iron is recovering a little bit, up 3%. Same with Nebius. Where is the CoreWeave dudes? CoreWeave is still feeling the pressure, but that's because of the course.
Turn around.
And that's because of the Core Scientific situation. There was an analyst that actually came out with a higher price target for Core Scientific, and said that there is no deal, that they don't expect any deal to happen because CoreWeave does not want to put a higher price, which again, fine. Pinduoduo is also not bad, I agree. But again, I rather own Alibaba because you also get the cloud business. Oscar is down 7.2%. Oscar is not 13, or maybe I missed something, but I think it's only down 7.3 right now. And Roberto, thank you for trading view money.
Now you have to. If not,
I feel like TradingView can sponsor this, because the amount of times we show this on screen for free. Maybe actually I'll send them an email. Maybe I'll send them an email. But yeah, insider selling is quite aggressive in CoreWeave. Is it? Because I mean the expiry, the lockup expiry is has happened a while ago.
Yeah, I mean, they every week you kind of see some sell-offs. I don't know if it's aggressive. I think it's aggressive in forms of the times, but the aggressive in size of the size, I don't think so.
Yeah. I think Nebius's lockup is
Yes, look at that Nebius.
What?
Look at Nebius. Sorry, I said yes. Look at Nebius. Excuse me.
No,
I'm sorry.
No, because yesterday I was talking, because someone said, "Oh, lockup expiry for Nebius is happening soon," but isn't the lockup period after two quarters of being a publicly traded company?
For who?
For every company, no? Isn't it?
Yeah, I think there's some rule in between though. I don't know. It's typically that, but then you can kind of offset it with some weird stuff if you have a good lawyer.
Because if it's 2 quarters, we already had 2 quarters. We had one at the start, like and actually we had more, no? So I don't know. Maybe that was a mistake, or maybe there is, and again, something specific with Nebius. We'll see. We'll see. What are my thoughts on Chime? Why am I hearing myself?
Oh, that might be me. I'm sorry.
Do you know Chime, or do you use it? Because I mean, if you're in the US, but do you know about it? You don't know about it. Interesting.
No. What is it?
Also, fintech, financial company.
No.
It's
All my money is under a rock somewhere.
This one is down 60% since it went public in June. So it's one of those failed IPOs at this moment. But I like it. I covered it, I think, when it was at $22, $23 or so. nothing has changed from a business perspective for me other than the stock became cheaper, but I don't own it. They report at the start of November. But yeah, it looks like a good company from everything that I've seen and covered. From a Google Trends perspective, it's actually much higher than a SoFi, which I was very, very surprised actually in the United States.
Did Neil freeze? Yeah, he froze. I was
No,
like, Neil, you are
but I'm
really good
here.
at staying still. Yeah, you're
Thank you.
back.
But yeah, all in all, that is, I don't know if you have something else.
Nope, I'm just getting hangry because I want to go eat breakfast.
Perfect, and we can close it out here. I added yesterday under 100. Jose has he sold puts on it. So
yeah, sold puts. I don't have puts. I sold puts.
yeah, he
Completely
sold
different.
puts. So yeah, all in all, there is way more green than red. Yes, Oscar is red, but to me personally, I might actually nibble a little bit just because it sits here on that magical line, and I do think that Oscar is just a better company than the one that just reported. Might be wrong, but we will have to wait a couple of weeks until they report their quarterly figures. They see you in November. But yeah, next week you're still here or you're not here?
Yeah, next week I'm still here.
Okay. Next week is a hectic week.
Yeah, we have earnings. We can definitely do some of those.
Yeah.
Wednesday we have Meta. I don't know if it's no,
Google.
But we have Meta, Microsoft, and Google all at once.
Wow. That's going to be interesting. Yeah, I have to see how I can make those things because of the time difference. But we'll see. We'll see. And hopefully the Wi-Fi at the hotel is actually decent, which is also an issue. But anyways, thank you all for joining. I really appreciate that. Later today, I'm not sure. I don't know if I'll do a stream for Intel, but we'll see. We'll see about that. But if not, we shall see each other either tomorrow or next week. So thank you all for joining. Have a wonderful day. And yeah,